And the reality is, I mean, look at what Michael Saylor's done with MicroStrategy, now called Strategy.
Mm-hmm.
He's able to expand his balance sheet and buy 479,000 Bitcoin, borrow there's plenty of liquidity in the bank, right? And he basically said that what was the word he used? He said that they're abundant.
Was it? Yeah.
Yeah. So
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.
to take you out. So you better be prepared. So it's kind of old time hockey. But this situation was the US comes out there, the game's up in Montreal. It's a super liberal city. And, the crowd starts booing the national anthem. And that's, okay, I get it. There are people who don't agree with Trump and all that, whatever, the politics put aside. You don't boo somebody's national anthem. It's just such poor form. And so the Kachuk brothers just probably looked at each other on the bench, were like, no,
Let's have it.
and then they're like, literally dropped their gloves the moment the puck dropped, and they were ready to fight. It was crazy.
Love it. And is the rule that if you stay on your feet, you can just keep fighting?
Well, it's not really a rule. It's the refs don't want to get in the middle of it.
Okay.
So it's dangerous, right? So they're not going to go and try to break it up when you've got these enforcers or these big guys, trying to punch each other in the head. You're a ref. You don't have any padding on. So they wait for them to drop, and then it gives them the opportunity. Where's that? Is it the Fed printing money? Is it banks lending money? Like, how is this? How is there more liquidity? Is it hedge funds? Using derivatives? Is it cross-border transactions and lending? Like, how does this actually? And the answer is it's all of it. And so you have to look at all of it to try to get a sense of how that money supply is either increasing or decreasing. So going back to first principles, Danny, you know this, but for the benefit I know you know a lot of what I'm talking about, but
assume
for
I
the
don't.
benefit of your audience, you will, for people who don't know this stuff, and we talk about the money supply and the expansion and contraction of it, like first principles. First of all, our central banks have manipulated the money, and they've created an absolute disaster with the amount of manipulation that they're doing with the money supply.
Mm-hmm.
They're either adding it to the market. Yeah, I mean, it's just whether capital is coming into your country or coming out of your country, and it moves that exchange rate up and down, right? And of course it influences, like we talked about in the newsletter, some financial stability. Right. Mm-hmm. So if you think about a foreign investment comes into your market, like into bonds and equities, that's adding to liquidity, and outflows will drain it. So global liquidity is not changing, but the liquidity in your region
I
is.
see.
So, and then of course currency exchange rates will impact it too. But other things that people don't think about that Michael's done a good job of analyzing, and this is all his proprietary models, but he also adds in their bond volatility. So these are all the things that go into global liquidity. So bond volatility is important because people will use from liquidity. And so you're looking at primarily the biggest beneficiaries are the high flying tech stocks, the S&P, and then of course, Bitcoin has been an incredible gauge for global liquidity if you look back in time. The only thing is Bitcoin, it trails liquidity. So if liquidity is up, then it takes Bitcoin somewhere between 2 and 3 months to catch up. So if you overlay those charts though, the Bitcoin chart and the global liquidity chart, man, they look really close. And so that's what you're kind of watching, but it's a 3-month lag. So,
okay.
Right. So it's not a great indicator, but it absolutely is directly correlated today. This may not be forever. I don't think it will be forever. See the volatility and think risk. They don't realize that volatility in a rising asset is actually a good thing. Why is that a good thing? Because it allows you to accumulate opportunistically. And so, and it's rising though over the long term. So it allows you to take advantage of drawdowns, especially. And then the reality is, I mean, look at what Michael Saylor's done with MicroStrategy, now called Strategy. He's able to expand his balance sheet and buy 479,000 Bitcoin, borrowing capital from the markets to do it. He's found a way to optimize his ability to borrow. How does he do that? He does it because of volatility. The volatility ends up being a good thing. So what he's done for your that the volatility in a decreasing asset's not a good thing. I mean, it can be a good thing if you're a hedge fund that is able to short it on the way down, but for the typical investor, it's not good.
Okay, let's get back. I want to pull this chart up that you did.
Yeah, this is Michael's chart. I want to be clear. Cross-border capital's down there.
Okay, can you talk us through this though?
Yeah, so this is the black line is that's the global liquidity measure according to Michael, and that 65-month wave is just that. It's that wave line that is it's a derivative of that time period, and it goes in that, it's like a sine wave. And you can see that the global liquidity cycle, just the money supply started expanding. So the central bank, the Fed's balance sheet started expanding back in the fall of 2019 before we ever even had COVID. So, and people forget this because COVID was so jarring that they forget that this happened all the way back then. And so, but that's what that's showing. And then the money supply just expanded straight through 2021 into 2022. And then the Fed turned off the spigot and it came back in, and it bottomed out in October or so of 2022. And we're back rising again.
And I remember doing a show on the previous What Bitcoin Did with Caitlin Long and Travis Kling back in 2019 when that repo market was blowing out. And they, at the time, they were saying that like this signifies something is really, really wrong.
There's plenty of liquidity in the bank, right? And he basically said that what was the word he used? He said that they're abundant.
Was it? Yeah.
Yeah. So abundant. So here's the thing. He's been asked this before. He hasn't been asked it in a while. I don't know why these reporters are giving him such softballs, but ask him the real questions. Like, these are the things that really matter. He was asked about when does he start getting nervous about bank reserves, because the reverse repo was being sold off. So now we got to unpack that, right? So what's the reverse repo? We just talked about the repo, where if you need capital, then you can take your treasury, lend it, get some cash for it overnight. Well,
I think you described it as a pawn shop to me.
A pawn shop. Yeah, it's pretty much it. Exactly. But you get it back.
Yeah.
And they're not going to sell it on you though. So it's taken over this pile. And so now he's looking at this, and he's been criticizing her all along that she should have gone out further on the curve. She should have gone further. I agree with him. She didn't. So now what happens, Danny? Well, we've got over $7 trillion of bonds that are maturing. That's that next chart you've got right there. This is the next year. This is what we have to deal with. Yeah. In total, with interest, you've got over $10 trillion coming due here. And they got to deal with it. What are they going to do? Well, Bissett has been critical of yelling this whole time. And now he stands there and he says, well, what am I going to do with this? So can I go out on the curve? If I start going out on the curve now, interest rates are, the 10-year is now sitting at, we're still running deficits because structurally we're at a point where we spend so much money, Danny, we can't keep up with it. Right. So just thinking about it, I'm going to give big round numbers that will be close to what's going on. Our tax revenues are about $5 trillion and our spending is about $7 trillion. So you think, okay, if you just take $2 trillion out, you're great. Okay, let's talk through where's that going to come from? Well, your mandatory expenses, and I've talked about this ad nauseum, but I'll do it really quickly for your listeners. Your mandatory expenses, these are signed into legislation. You can't, you're not going to cut these unless you find fraud in them, which this is a new wrinkle, right? So that spending, though, that's signed into legislation is $4.1 trillion annually. You've got defense spending, which is about $900 billion. So now you're at $5 trillion right there. But here's the thing. You haven't even talked about your interest on your debt. You cannot default on that. That is absolutely mandatory. Because
what is the interest at the moment?
Which is on inflation. Like if you just take the straight line on it, sure. And tariffs on other countries' goods coming into here are inflationary if we need those goods, if they're necessary. If they're chips or if they're auto parts that we need, it's going to be inflationary. If it's goods that can be replaced, no. If it's goods that we already have here that they're tariffing ours and we're not tariffing theirs, well, then that makes strategic sense to me. Bring that money back home and let it go to our producers, our manufacturers. That would make sense, but that's painful in the short term, likely, and it takes some time.
So that's like the scale of the problem, and it seems like a very big problem that the US has right now. Well, I'm sure it's not just the US, but what if you were Jerome Powell or Scott Bessent, what are the things that they can do to kind of get through this?
Well, I mean, Bessent's doing it. He's going to kick this can down the road and keep issuing T-bills until they can't. So this comes all the way back to banks. They would come into their desk and there'd be a big stack of, it was like you ever see dot matrix printers, Danny? You're too young. But
no, I know what they are though,
holes on the side and they just, Well, they had these huge runs of these printouts of bonds, and they had all the bonds in there, all the treasuries, all the mortgage-backed securities. And they would, if somebody called and said, hey, what's the price of this bond? There was no Bloomberg back then, so there was no pricing. Like there was no dynamic pricing for them. It was all on the phone, and there was no ticker for bonds, right? So at least you had stock tickers since way back when, since the buttonwood tree, right? So, but there was nothing to look at. So they had to look at these papers, and so they'd look at the run and say, oh, this, I'll pay you, 97, 0.5 for this one. Okay. But if they asked for a bond and it was like, well, it's not on the run, I have no idea. It's not liquid enough to even be in this massive stack, then that's off so that I think allows companies to start moving into this space. Meaning they're going to make it easy for you to buy Bitcoin right through your Chase or Wells Fargo or, Citibank account. And then they're going to offer products around it. They're going to lend around it. They're going to, the collateral products, they're going to be all kinds of stuff. So that's that. And then of course we've got this new administration who's clearly crypto friendly. I mean, the guy launched his own Trump coin and Melania coin. He's talked about Bitcoin a lot, as has his family and his cabinet. You've got people around him who, like David Sachs and Bessent, these guys own Bitcoin. Lutnick. So that's all a big deal. And you've got Senator Lummis, who's been driving this bill, the Bitcoin Act. And
Hester Peirce in the SEC.
Reserve. What's that?
And Hester Peirce in the SEC.
And oh yeah, that's right. Peirce at the SEC, exactly. But another that we're needing to stabilize our currency. That's just not. I just don't think they're going to want to do that. Yeah. As much as a lot of Bitcoiners are hoping that will happen, I don't see them acting that way. Remember, again, Trump he's got a huge ego. He wants the stock market up at all-time highs. He wants financial stability. He wants the economy roaring. And the way to do that is to is to keep kicking this can down the road, creating liquidity, making money easy, and keep going. And so, that's so those are all kind of tailwinds for Bitcoin on top of this expansion of liquidity and liquidity getting easy. So, or continuing. It's already been ticking back up. It's just going to continue probably into the end of this year, into next year.
So they'll probably get the Bitcoin Act.
We got early in on MicroStrategy and that thing. We did some interesting investments in things like we were lending Bitcoin to like a company called Cormint out in West Texas. He had access to excess solar and wind power out there that was just stranded.
Is that James McAfee?
That's James. Yeah.
Yeah. He's great.
He's awesome. And so that was a great deal. That's been a fantastic investment for us. MicroStrategy, we got in very early on, made our biggest position. That's been a great one for us. So, but now we flash forward and we've more than doubled the fund. And so, on the asset terms. And so, but that fund's closed. We got people who are like, we're starting to get interest now that Bitcoin has gone from the $17,000 to $20,000 area that we were raising during that everybody wanted to just run for the exits. Now we've got people interested because Bitcoin's up at $100,000. So
yeah, it should be a bit easier.
The co-managing partners of Bitcoin Opportunity Fund. And so, but he's done a lot of corporate finance. He was a banker at Goldman and, he's Harvard Business School guy. We won't hold that against him, but he's a smart guy. He's a great guy. And so, yeah, but that's like a deal we're super excited about. That's just not typically what you would get in exposure in this space. So we're focused on things that we bring, like our experience and our knowledge. We bring that to the table that we feel that's something that other people aren't doing and is super exciting. And we think that the most boring business like this can be the most exciting investment for us and our investors. That's kind of what we're focused on.
The big question I think is always for like any VC in the space is like, how do you beat the Bitcoin hurdle rate? How do you think about that?
Yeah. Well, I don't say we're going to beat the Bitcoin hurdle rate. Depends on what you think the hurdle rate is going to be, first of all.
Yeah.
So our aim is